Hi there, guys. Welcome to today's Bretton's market wrap-up. Usually happens on Fridays. Every Fridays is our markup wrap-up session, not markup, but wrap-up session, where we actually just look at what have had happened during the week, but most importantly, looking at your current trades, what you would need to do, as well as what's happening on this Friday for the past 24 hours, especially the market opened in various other countries first, and whether or not it could actually help us decide what to do with our current trades, as well as what other trades that we can actually go on to for the rest of the day, as well as plan a little bit or expect a little bit of happenings and events for the week ahead to actually just gauge the market a little bit better. So we've got a couple of things that is really important for us to know as traders. Now, this is your Bretton Institute website. You can get in touch with me there. We've got Bretton YouTube. We've got Bretton on the Facebook page as well. We've got a couple of other things that are yet pending to be launched, especially the courses and certification courses as well. And the membership area is still taking a bit of a back burner at the moment. I know lots of traders have been asking me about when the launch is going to be. I'm trying my best. Hopefully, in a week or two. I know I've been saying this for quite some time because of my health conditions, in and out before as well, but I'm much better. And I think we can finally have that launch. So I'm working on all the courses on geometric patterns, especially into the Bretton Institute membership area. So now we get into the market analysis, trend analysis. Market analysis, usually it's best to do it before you go on to your trades, especially before you actually pick the right pair or the right instrument to actually trade, or the right instrument to actually analyze further. So we need market movements. We need to know a little bit about what has actually gone on for the past 24 hours. Now, we are on Friday, 25th of June. Now, for the past 24 hours, we have seen that the market is very much into a risk on meaning they're taking more risk. They are not risk off. They are not going into safe haven so much the past 24 hours, because as of Thursday yesterday, there was an announcement by Biden in the US talking about the $1 trillion infrastructure expenditure. So that has actually risen stocks a lot. So stocks, Dow Jones have actually gone up 300 points. That is mainly because of that. And we see stocks going up, and we see stocks, when stocks go up and the risk on mode is more, the expectation is actually for the US dollar to go up, because you need more cash to buy more stocks, and then you need more confidence in the dollar's value as well to actually purchase more stocks. So with Nasdaq, S&P 500, they are all fresh record high, and basically we have got mainly the main catalyst of this was the announcement on Thursday yesterday about the $1 trillion infrastructure. Now, there's also a bit of a trick in the market, meaning that they might want to trick the traders a little bit more. And with tricking the trader, meaning that I see that the economic calendar right here has got the USD personal consumption expenditure categorized as medium category. Now, this is not very accurate, because this is what the whole market is all about today, especially is that the US government uses the they call it the PCE deflator. Now you've got CPI and you've got PCE deflator. CPI, consumer price index, to actually measure, to know the expenditure of consumers in the US. But then the PCE deflator is much more not accurate, but it's something that they use as a tool as well to know people's expenditure in the health and other sector that the CPI does not cover. So in other words, today might actually be very volatile for some reason. A lot of people will be wondering, why is it quite volatile, especially for the major pairs, the USD. So this is basically why, is because of this deflate. All this here, you've got quite high activities of all the CPI, PCE, and everything else, but then categorized not so much as not so much important. And I also noticed as of yesterday, today, early morning as well on Bloomberg and everywhere, sort of slow down in terms of all these news. But I think they're trying to not promote so much that the market will be quite volatile, and maybe today for a Friday might actually be volatile. But with this, we need to actually be looking at what would actually be happening after all these announcements and various others, just to be aware. So in other words, in summary, we are looking at US dollar potential rise because of inflation and various other things, especially with stocks and all that. I've checked the VIX index, the fear index as well, is actually on the downside, meaning that the fear is on the downside, steadily going down slowly, which basically means that maybe the risk appetite will actually be much more confident. People are not putting their money into safe haven, so we are expecting gold to actually go down. So there are various other things. Checking 1 2 3, checking 1 2 3. You guys cannot hear me? Let me put the mic a little bit closer. 1 2 3. Is it okay now, Alfred? It's the distance of I was moving away from the mic, I think. Okay, so yeah, so in other words, in summary, we're looking at the USD expected to the upside with the inflation and everything else. We are expecting gold, I think, to be I see, lost the voice. Okay, maybe it's the connection of my mic. Okay, now it's okay, right? All right, so the most important thing is, if you guys have lost my voice earlier on, is in summary, we are expecting lots of volatility to pick up today, mainly because of the stock situation. Stocks are going up because of Biden's announcement of the $1 trillion expenditure of infrastructure, government infrastructure. That is giving confidence. So with that, we are looking at possible movement of gold to the downside. So we'll look at all that technically, but right now, USD and US crosses a little bit on the upside, and I think I'm expecting it to actually pick up. So all the major pairs may actually be quite good to actually trade today for the for the day, intradays type thing, because it's a bit risky to leave trades open today until the weekend, because Monday we would expect the extension of volatility as well for this week to actually start. Next week as well, we would expect loads of other opportunities, I would say, from the economic calendar. We've got a lot of data as well going on. We will also touch a little bit on oil because oil is actually very, very interesting. It rose 22 cents. It didn't look like it risen a lot, right? It dropped quite a lot as well. But then overall, the trend is actually up for oil. But then it's not going to go up so much at this moment of time. It's leaving the space for stocks, for USD to go up, for gold to go down, stuff like that. And then gold would actually be going up the same sort of pace with the commodities, I think, next week onwards, after US and the other markets are actually having a correction. Then it'll start to actually go up. So not yet, but overall, it's quite interesting that yesterday it actually touched the same price that we have expected at 73.30, exactly on there. It risen 22 cents. But then, the rise is actually, does not look very confident, but the overall trend is expected to go up for oil. We will cover this on Sunday's commodities as well, mainly because the inventories have actually fallen and the demand, it keeps going up and up and up. So because of all the COVID situation and everything else, now businesses picking up, travels picking up, a lot of things are picking up. So now the demand is looking like it's not enough. The supply is not enough to actually meet the increasing demand. So there is also something going on in Cushing in Oklahoma. Now, in Cushing is a city in within the states in the Oklahoma region. Basically, that is where the stock are piled up, and it is the delivery point for WTI crude oil. So basically, what happens there is that they have already found, I mean, all the reports based there is actually quite negative on the supply and very, very positive on the demand. So this is also one of the big reason to believe that the possibility is quite high for oil to actually go up eventually in the midterm, maybe short term. It's just correcting and stuff like that, mainly because of all the policies and stuff like that. It's the month as well. They are in the process of getting all these orders more organized, but mainly because in the Oklahoma region where the stockpiles are for the WTI, they are finding that a specific type of oil is also lacking. The supply is really low. It's called the DSW, or domestic sweet type oil. So this domestic sweet type oil, the demand is just increasing like crazy, but then the cut of production and also the supply is really low. And then they're expecting, and they're making a report as well to show that there's loads of demand coming in, but then they also notice that the supply may not actually be enough. So this will sort of encourage the price of oil to go up until September. So you've got up, down, but then the overall graph will actually most probably be on the upside for oil. So we'll talk about that a little bit more deeper analysis on technicals as well on crude oil, especially the WTI on Sunday. Okay, this coming Sunday. So that is basically it. With regards to gold, it's awaiting the US data because it's very much correlated to the US data. So we need to look at all the PCE, the CPI, everything else that's going to be announced today. We've got the personal consumption expenditure right down to the CPI expenditures. We've got personal spending. So we've got various others, which is really a very big surprise for me that even the Fed's speech right here is categorized as just medium, and various others here are supposed to be in red. But whether it's an error, whether it's purposely done, we don't know. But then whatever that is going to be announced here, I would categorize it as above medium, and actually you can categorize them all as very important because it's going to feed the volatility of the market and also decisions of the dollar's strength, which will impact gold especially. So that is the trick here. That maybe it's just purposely done, or maybe not. Maybe it's just categorized as medium. But then here, whatever that's going on here, in my belief, it's going to cause a lot of volatility today, because it's intertwined with a lot of decision making, especially with the US dollar stock side of it and various other things. Okay, so there you go. So this is basically what's happening on the fundamental side of it. Let's just very quickly go on to just to take a look at the top movers right here. Now, if I were to go to the 4-hour, I prefer to look at it from the daily perspective. With the daily itself, as you can see, we have got NZD dominates various, but then we can see that it's straight away with the USD, and we can see that we've got USD right here as well, but not too many. But we've got NZD in general. Now NZD is on the plus at the moment compared to the other currency. So okay, we can then take a look at NZD's volatility as well today, and just to give you a little bit of an idea of where the traders and investors are focusing on. Now, I noticed that we have got questions on Gbp Crosses. So let's look at the heat map as well, just to get a bit of an idea of GBP's current performance in terms of trend first. So if we look at GBP in particular, we can see it's a little bit of a mixed bag right here in terms of trend. But against the USD, for as of now, it's looking like it's bullish right here. But we are looking for dark blues and dark reds, which does not really happen so much in the GBP. So if we look at other currencies like CHF, we've got more of the dark rates going on. That means that it's getting stronger with a certain type of trend. And CAD, we've got more. We have got more on NZD right here, but it's again, it's a little bit of a mixed bag, but it is quite clear that NZD is much stronger than AUD right here. So you know now that AUD is a little bit lower. or weaker than the NZD. This is important for us to know, because sometimes we need to know, because they are like correlated very much, but who dominates the move as well is important. So at the moment, NZD is stronger than AUD. So here, as we can see, the overall heat map right here, we've got a straight on bullish. Every currency here is looking like it's bullish against the USD, but it's not strongly bullish. It's just the blue. It's the light blue, it's not the dark blue. So this can actually change quite easily as well. But then following the news and everything else on the fundamental side, it looks like it might actually be bullish for the USD, because of the 1 trillion pump in, agreed pump in of money for infrastructure. That is a very big boost for traders and investors, and it's already shown as of yesterday with all the stocks prices going up, especially Nasdaq, Dow Jones, S&P 500, everything went up. Okay, so that is a sign that it's going to be bullish for the dollar as well, and it's a risk on mode. Okay, so we have done on that side. Let us just go a little bit more right here on a bit of market news. You can see that the focus is on natural gas as well. You can see its price rise again. So oil is on the upside. Dow Jones a rebound may lift sentiment again. It's actually impacting all the things that are going on in Wall Street in terms of stocks prices going up. It seemed to be also impacting all the Asian stocks as well. So it's always correlated positively that way. So hence the reason all the Asian stocks are also up today. So let's see, we have got New Zealand dollar forecast, improved trade balance, Westpac. So it looks like a little bit on the positive side. It says gain against the US dollar right there. And major banks, Nasdaq, that was yesterday's news. Major banks pass Fed. So here you've got flying colors on the major banks. Federal Reserve's stress test, it's called. It's actually a sort of a report from 23 banks, and they are all very positive about the economic outlook, about the finances, banking side of it, and everything else. So that is going to feed a lot more of the upside for stocks, as well as it'll drip down to the US dollar and make the US dollar go up as well, most probably. Okay, so that is it now. So Canadian dollar price outlook, because it's actually combined with the dollar, so it might actually be going onto the upside only when gold and all the rest actually goes up as well with oil. So it's all expected commodities in general to go up, but not at this timing right now. Now it's giving way to the buyers of US dollar, and also the risk on investors at this moment of time. All right, so let's get going at this moment for some GBP crosses. It was Gbp Jpy, I think, Alfred, is that correct? Let me just check. So GBP USD, JPY, and ZD AUD. All right, so let's take a look at the first GBP cross right here. GBP USD. Now, I'll just start off fresh right here. So we have got expectations, as we have mentioned earlier on, for USD strength. So if USD were to strengthen, then obviously we might expect correction, or maybe reversal of GBP to the downside, right? But at this moment of time, from the daily chart itself, it is trading at 1.3924. I'll just lay out the risk element first, which is psychological levels. If prices were to go up, it'll reach the 3950 psychological level. I just want to make the borders first, so you know where it might actually reverse better. Now it is at 1.3925 area, which is close to the 20 psychological level. But if it continues to go up, then it might find resistance at the 3950 area. As it goes downwards, then you have got the 3900 psychological level. 3900 psychological level. So now we're looking at the daily chart. So we zoom in a little bit and we focus on what's going on in terms of price at this moment of time. Is actually trapped in between the 1.3950 psychological number and the 3900 psychological number. So in my personal opinion, I think if at all it actually breaks out of 3900 and goes down more, then it gives you a little bit more confidence to the downside for the GBP. Now, to the upside, as what I can see, if it does actually go above 3950 and above, it may have some more challenges actually here, mainly because as it breaks out, the only one that I can see a bullish sort of mother candle that goes up, appears up, it's actually quite short-lived, meaning that it's not very long here. So you have got that area right there as a, I'll just change this color right here to blue, just so that that is the support area, okay, to push price upwards. But then we have got a bit of a limit here in red, okay, the next resistance. So blue lines are mostly, I use it visually for giving us support, but red ones are your resistance. So here, as it goes up, if it does go above 1.3950, we don't know that yet because it's just playing about at this moment of time. It may have a bit of a limit right there at the 3980s area. So 3970, you would need to actually sort of exit right there. I mean, more of the bullish type movement would actually be in this area here. Let me just see. I think the higher it goes, the stronger it gets for the GBP. So it's a bit too early for the buying to actually take place, because the buying zone only starts here. See, this is where the buying zone starts. Okay, at 4000 area. So 1.400 area, 1.4010 would be a better ideal price. And then we've got the size of that candle right there, that's above. So in other words, I think it's favoring the downside a little bit more GBP, but also because we are expecting the USD to go up. So it's, you know, the buy side, the buy territory, and the buying opportunity for GBP USD is much higher, and it's got about 100 plus pips potential in this area, but it's quite far away from the current price now. So what we need to expect at this moment of time is for no trading at this moment between 3900 and 3950 area. This 50 pips gap here is going to help you decide where it wants to break out from. So if it does actually break out from the 3900 and go under, and let's say USD gets stronger with all the other fundamentals, and then you can see that the USD gets stronger with all the economic data that is positive, then you have got a nice clear advantage to actually sell the GBP USD and not buy the GBP USD. Okay, so as it comes down maybe here, I would think that yeah, it needs to come under 3900, so 3890 area, let's say. So 3890 would probably be better. Let's say I will lay out the selling pending for selling more than the buy, because at this moment of time it's more biased to the downside as opposed to the upside for GBP USD. Okay, so here 3890 is your selling price, 3890, and then we have got some referral point. Just as the eyes could actually see, you've got mother candle, bearish mother candle here, bearish mother candle here. So we see where it actually sort of ends. We'll take the shortest one roughly here. Okay, so that is roughly where we can expect it to fall to, and then to safely take that. So that is 3820, I would think 3830. So I'll adjust this to 3830, giving you the TP potential. TP area is 3830, entry 3890, and exit 3830. So that is your potential 60 pips also here. So this is your sell zone right there. Okay, sell zone as well as your pending sell area. Georgina, lower down a bit, please. Sorry about that. It's school holidays here, so children are at home. Okay, there you go. All right, there you go. So your sell zone is closer um, from the current price. It's closer the selling zone than the buying zone. The buying zone, safer buying zone would probably be a little bit higher. It's better because as it goes up, for example, it'll trick the traders thinking that it's time for it to go up. But then, on the fundamental side of it, it's more likely that the USD would actually pick up. And with positive data later on, if at all positive data comes in, it'll fuel the upward moves for the USD, especially, and that would actually then create this as a stronger resistant area right here. So there is a potential A here, B here, C, and then down all the way, mainly because from here, if we pull it down here, it's a minimum 38.2 as well here for the C point. So that's a good sign. So there is a potential for us to draw a bearish ABCD later on as well to sort of confirm that pending order position. So I would think that if I go on to weekly chart, as you can see on the weekly chart, if you see it at a glance on the GBP USD, you've got a very dominant mother candle, bearish mother candle there. And the current price now is actually within this bearish mother candle, meaning bearish territory. So that single mother candle, body of that mother candle itself is 290 plus pips on its own, almost 300 pips. And then as we look to the left, it's already given us the hint right there with a pin bar needle right here telling us that the buyers have already decided not to actually come to this area so much because they are exhausted. So then the predominant tight move that would actually be much better considering where the current price is actually to the downside, not really to the upside for GBP USD, okay, in general as well. And then as we go on to shorter time frames right here, you can see you've got unclear type trend, but then the prices have already sort of given you a hint that they are under all the three lines and going lower and lower under the three lines as well. So this is another hint for GBP USD. Okay, is that clear? Alfred, all good for GBP USD? Shall we go on to the other GBP crosses? Okay. All right, good. So let's go on to GBP Jpy. Yeah, it looks like it mainly not because it's more sell, it's because of the fundamentals as of today and yesterday is leaning towards positive of the dollar. Because it's positive to the dollar, it does not mean that it's negative for the pound. Maybe pound versus another currency would actually be different. But we were looking at GBP USD, so we were comparing it with the dollar. So with the dollar, it is on the downside, yes. So now we need to look at GBP for the other currencies against the other currencies, right? So GBP Jpy, let's say. So here, if we go on to the GBP Jpy, and let's just now because it's a risk on, so maybe, just maybe, I mean theoretically, traders won't pay a lot of attention in buying the JPY. So in my opinion, JPY would actually sink down a little bit more. So if JPY was to sink down a little bit more, then it would rise up the GBP to the upside. So GBP JPY will be a very different sort of picture, mainly because fundamentally, risk-wise, risk on, risk off type thing, GBP would actually be looking like stronger than the JPY. So here, if I were to go onto the 4-hour chart right here, you can see not very clear in terms of trend right here. But if I go onto the daily chart, it's overall still to the upside. Now, if we look at just the daily chart right now, it is showing signs of upward type movement. And then uptrend, let's say, right? And then we we insert the average directional movement index to look at how strong the uptrend is. Now, as you can see, it is just touching 25 line. It has gone above, but it's not under the 25 line either. So that is a good sign, meaning that it has potential to the upside. If you look at the weekly chart, the upside strength is still there. It's coming downwards a little bit, maybe weakening a bit in terms of the strength, but overall, it favors the upward type movement. Okay. But then we need events to actually sort of drive the JPY down and drive the GBP on the upside. But if you look at the daily chart right here, now overall trend meaning not based on one time frame. You look at the overall trend, one time frame after another time frame, it's more on the upside. If you compare GBP JPY, GBP USD, GBP USD is clearly to the downside, but then GBP JPY is clearly looking like it's got room to the upside. Now, if you look at GBP Jpy, just look to the left. What you would notice is a bullish zone, okay, or a buying type zone based on this mother candle right here, the body of the mother candle. See, body of the mother candle right there, body of the mother candle there. Okay, I'll change this because it's bullish. I'm changing this to blue in terms of color. Okay, there you go. So I'll stretch this out based on the opening price and closing price of that mother candle, body of that mother candle. And you can see where the buying zone is. It's already at 153.30, 154.30 current price right now. Basically, it means that it has already entered the buying zone for GBP / JPY. And the good thing is as well is that it has gone above the 154.20 psychological number. Now it is at 154.30. So it could actually be an ideal buying sort of price as well. Because it's 10 pips above the 154.20 psychological number. Now, this buy zone area is worth about 190 pips, okay? About 190 pips. So it's quite good. It's based on that referral point right here. If I go on to weekly chart, okay, you can see it's still there intact. I go to my monthly chart. Okay, you've got that one ending there as well, which is good. Okay, so far it looks like there is a potential. Right now, perhaps if you are buying at this moment of time, or if you are buying, then you still want to limit your buy and take profit at 154.70. Mainly because before it reaches 154.80, that is choice number one, option number one. Or if you have not entered, you want to play it a little bit safer, then you want to take into consideration this area right here, which is also a resistant area. That is at 154.43, which is very close to 154.50. So if I want to be more conservative, then I won't buy until 154.60. Okay, so 154.60 right here. If you are more risky, you buy now and you put your take profit at 154.70. If you are more conservative, you don't enter at all right now and you do your pending order at 154.60, and then you take profit at 155.90. Okay, so that is basically it. Or yeah, you can look at this area as well. 155.10 is also another area to exit. So you've got two choices of entry first. The first choice of entry is enter now, and you take profit 154.70. Your second choice is not to enter now, enter later. Enter later at 154.60, and then you'll take profit 155.90. Or to keep it a little bit safer, 155.70. Okay. These are all pending orders. I mean, the pending order, the conservative one is more on pending order. The other one is you can buy now and fix that price for your take profit. Okay, so it's looking not too bad. It may have, but it needs more driving force, especially fundamental events and stuff like that, to actually really push it to go up, especially for the GBP. And then we need more. More people buying the USD, so that it's a risk-on environment. And then the gold falls, so that then the safe havens like JPY and CHF will actually fall. So if that does actually happen, then you can see that you can hit your take profit. But then in terms of a position or the location of the price, it is in a buying zone, and if this candle were not to exist, then it's going to be a very risky type area here to buy. But because of this one right here, 200 plus pips, it's quite good, almost 300 pips on that one there. Okay, so that's a good thing. 200 pips, sorry, 194 or so, but still it's considerably quite strong, quite bullish type candle or size of the candle. Okay, any questions on this one here, GBP JPY, before we move on to GBP AUD and GBP NZD? I'll just go on to GBP AUD right here. Now with GBP AUD, it does actually look a bit of a bearish type movement here. Okay, so we need to look at GBP not in general, but we need to look at it specifically with the pairs. Okay, so GBP combined with which pair? So if I go on to weekly, let's say, just to get a general term, not very clear in terms of trend, GBP AUD. Yes, so you want to look at GBP Jpy. GBP Jpy, it is in the zone, but when I say it's in the zone, you have to still be very careful with your entry and exit. Okay, especially your exit. Your second price of entry is, if you are conservative, that means 154.60. That means you don't enter now. You enter later, you put your pending order at 154.60. You exit at 155.70. That's about 100 pips potential only, but we need to be a little bit realistic with areas like here's a resistance, here's a resistance, here's a resistance as well. Okay, so if it's pushed by fundamental quite a lot, then it's quite a good trade. If not, then it's still risky reasonably, but we are not overly risky because we are inside a buy zone, a potential area. Okay, all right. So there you go. This is GBP JPY. Let's go very quickly. GBP AUD. I mean, if I go into the 1 hour chart, it looks like it is still to the downside. It's trading at 83.32. So it's still not under the 83.20 yet. So as it goes lower, I think it may actually find a little bit of support at the 83.20s area, if I'm not mistaken, because this is an area needs to be paid attention to. This is resistance strong, could actually turn out to be support as well here, and it is exactly at 83.20. So my guess is that it is on the fall right now, but it may have a potential of reversal. Okay, may have a potential of reversal. Let's see stochastic. Stochastics are not really showing any reversal yet. Clear reversal on 4 hour chart. Yeah, nothing there yet. So we'll use the little bit on the relative strength index RSI as well. to draw a trend line. On the daily chart, it's clear it's on the downside. We have got this touch points right here, 2 touch points. You can see the downward, it broke that upward trend line. So that is more, it's favoring the downside, but just be careful for the 83.20 psychological level right there. Okay, that is, and also this area here could become support, mainly because it's got a very strong, exactly coincidentally, a resistance right here. So it can be a support right there as well. Okay. So 83.20. So once it goes under 83.20, then it may want to go down more, but then you want to watch first what goes on. But it looks like it want to find support at this area at 83.20. So once it finds support, you can go onto the daily chart or the 4-hour chart, maybe the 4-hour chart, and look at all this bullish candle right here and use that as your reference point for the upward type movement, meaning to buy, but then not yet at this moment. Let's see what happens once it goes. Does it actually go lower and find support at 83.20? If it does find support at 83.20, wait until it goes to 83.30, then you enter 83.30, and then you find bullish candles as your reference point, mainly this one here, let's say, and that's at 83.70 exactly. That's nice. So you can buy at 83.30 for GBP AUD only if it reaches there. Wait until it falls first, do a pending order at 1.8330, then you take profit 8370. So, or you make it a bit lower, 8365 would be your exit price. Okay, so be better, a little bit better, just to confirm, because you got all this mother candle, bearish mother candle here as well. Okay, that's it. That's for GBP AUD. Is that okay? Now we'll just move on to GBP NZD as well. I'll make that as the last one that we see today, and then we can then take that further on a one-to-one. If you've got any questions, you can ask me. Okay, we'll take a look at GBP NZD. There we go. So, because we've seen earlier on that NZD is a little bit stronger NZD, but as we see it here on the daily chart, it might do the same thing as GBP AUD, finding support. So now it is at 1.9670. It may have a little bit more room down, maybe at the 96.50s area, because we see that you've got the bearishness there, you've got bearishness there of another candle as well. So if we see, perhaps take it down there, 95, no, not 95, but 96.50 area. It's a little bit more risky, this one here. This has got too many areas not very clear right here when I look to the left. So it's got a support right there, 96.50, with this mother candle right here as well. So it's the same thing. It's very similar to what I've mentioned earlier on GBP AUD. Let it come down first to look at whether or not it reverses at 96.50. If it does reverse at 96.50, going up and up and up, then you can enter a buy at 96.60, but make sure you exit at 96.90. Okay, so that is about 30 pips potential right there. Still, it's a risky, it's not very clear as well, but then that is like a sort of a short-term type movement that could actually happen. Okay, that's basically it. Any other questions? Any questions? So far, all good? Okay, yeah. What's your question, Alfred? No questions. Okay. Bank of England, yes. Bank of England, the monetary policy remains steady. You're right. It has dropped a lot, but it does not actually mean that it reacted to only that news. So there's so many other data that went on to that. The Bank of England one is probably the biggest, but also with current situation of the COVID, current situation of the other economic data basically was not very strong as well. So the BOE just fueled that a little bit more. So yeah, that's basically it. But again, we cannot look at GBP in general in all the pairs to be the same, yeah, because you can see that GBP JPY is very different because JPY is your safe haven. Now it's reacting, JPY is reacting, bearishly, mainly because of USD strength, potentially as well, because it's still early as well. The UK hasn't opened and the US hasn't opened. So we need the UK to come in first, the UK traders to come in with the London Open, and then we get a little bit better idea. Then by the time we are almost going into the US Open, then we get much solid idea. Then we know where all the prices have actually touched and then reverse or not reverse and come down. Okay. Yeah, it would actually do that, but what is happening right now? I mean, every time it would actually happen like that, that's called news trading. It reacts to the news the same way, but then the trend, overall trend of the pair would actually be different, right? So the initial reaction, you're right, it would actually react to the news, but then we're not news traders, correct? We're not news traders. If you're a news trader, then you would actually see all the pairs as the same trend because you would look into that moment of time scalping the news at that time. But you can see that all the four personality of the pairs as well have actually changed as of today. Is it are all the four pairs all bearish today since yesterday in terms of the trend? That's the most important thing. Yeah, exactly. So ranging, and then when they're ranging, they're actually thinking whether to go up and go down. So not all four will actually have the same decision when they break out, right? Does actually depend on what is it combined for. So that's why at the time that it was released, it was good for the news traders and the scalpers, but we are not scalpers, news traders. I'm not, at least, so I don't actually know how to trade like that. So I only know that they've got their own personality. They will react to it at that moment of time, but then now it's got its own mind right now, its own personality, basically based on what GBP is combined with. Okay. All right. That's it. Okay. That's all the time I've got for you guys. Yeah, I'll have this one recorded and it will be available on the YouTube channel. Okay. All right, guys, take care. Thank you very much. And we'll see you guys soon on Monday. Any questions, just ping me, direct message me, and you know where to communicate with me. So take care, guys. Happy pipping. Have a good weekend as well. And we'll see you guys soon. Bye-bye.